Today, we will talk about the definition of head of household, HOH, who qualifies for this tax status, and the effect on income tax brackets. Head of household is a filing status on tax returns used by unmarried taxpayers who support and house a qualifying person. Taxpayers may file tax returns as head of household if they are unmarried and pay more than half the cost of supporting and housing a qualifying person. Head of household is a filing status available to taxpayers who meet certain qualifying thresholds. They must file separate individual tax returns, be considered unmarried, and have a qualifying dependent, such as a child or parent. Further, the HOH must pay more than one-half the cost of supporting the qualifying person and more than one-half the cost of maintaining that qualifying person's primary home. To be considered unmarried, the HOH must be single, divorced, or regarded as unmarried. For example, married taxpayers would be regarded as unmarried if they did not live with their spouse during the last 6 months of the tax year. An HOH must pay for more than one-half of the cost of a qualifying person's support and housing costs. The HOH must also pay more than one-half of the rent or mortgage, utilities, repairs, insurance, taxes, and other costs of maintaining the home where the qualifying person lives for more than half of the year. The enactment of the Tax Cuts and Jobs Act of 2017 resulted in the suspension of the personal exemption through 2025. Back when there was one, HOH filers had to be able to claim an exemption for their qualifying person. If you qualify, there can be significant advantages to filing as head of household rather than single. There are two main reasons for this. Filing as an HOH can provide significant savings for taxpayers. Below we compare the tax burden for an individual earning $70,000 using the different filing statuses. For 2022 tax returns, which are due April 2023, the HOH has a standard deduction of $19,400, reducing their $70,000 taxable income to $50,600. From that amount, $14,650 will be taxed at 10%, and $35,900 at 12%, bringing the total tax bill to $1,465 plus $4,308 equals $5,773. In comparison, a taxpayer filing as single or married filing separately qualifies for a standard deduction of $12,950, reducing their taxable income from $70,000 to $57,050. Here are 5 key takeaways. 1. Head of household is a filing status on tax returns used by unmarried taxpayers who support and house a qualifying person. 2. To qualify for head of household, HOH, tax filing status, you must file a separate individual tax return, be considered unmarried, and have a qualifying child or dependent. 3. The qualifying person must generally be either a child or parent of the HOH. 4. The HOH must pay for more than one-half of the qualifying person's support and housing costs. 5. The purpose of the HOH filing status is to provide single or separated individuals with dependents a financial boost. Hope this would help. Thanks for watching.